So anyways, everything that's out there now on the syllabus and in Blackboard should be everything but your second practice problem, and I will get that added. I just was trying to make sure everything else was up there so you guys could roll. Okay, so for this chapter now that we're rolling, chapter 9, you will see that we kind of roll around with chapter 9, chapter 10, chapter 11, and 12. Then we take a break. The break that we have is the week of Thanksgiving, and that will be your, quote, week to start on your big tax project. The main purpose of that is for the face-to-face people so that that is your week to work on it and you don't have to come to class on the Tuesday before Thanksgiving. We come to class the next week and we do chapter 13, which is tax credits, and then it's your final exam week. The reason I did that is because otherwise we come to class that Tuesday before Thanksgiving, which is fine, but then we don't meet for 2 weeks. So I'd rather have a week for you to look at it, come back and meet the next week, and then if you have any questions, we're here. So I'd rather give it to you a week early, and then if you guys can look at it at your own pace, and then we'll come back together. So that's kind of how I look at it. And credits are on your tax project, all right? So we will still talk about them, but it allows you to kind of get going and take a look at it. Some of you guys will be fine and might finish it. I don't know. All right, in my mind, it's not the perfect one I'd like you to do. The one I like you to do actually costs $20 a student, so we've gone away from it. I think in the end, I'm going to have to just make up my own and then have them put it in Cengage is probably the best scenario because I don't think the one they have is comprehensive enough. I don't think it covers every aspect. That's my opinion. So, all right, so let's talk about this. A lot of things you guys are going to see and hear today, you're going to hear the word until the Tax Act of 2017 because a lot of the things in deductions of self-employed, it is on hold until 2025. Okay, so Morgan, what she's going to have here, she's a recent college graduate and she majored in child development. She has 2 different jobs, all right? She works at a preschool Monday through Friday, but just 7 to 3. And then because she's trying to pay off her loans and buy a house, she freelances in the late afternoons and evenings. Her 2 different things is one of them, she's kind of like an Uber driver, but it's not called that. And then she also tutors elementary students in English and math. So she can either do that online or face-to-face. So those are her 2 different side jobs in addition to her early education job. So she has taken her 2nd bedroom in her apartment, and that is her freelancing home office. And she has a large table, several chairs, and a laptop, so that way if she's tutoring in her house, she is all set up. And she keeps records of everything, and she keeps supplies for everything. And then she said even though there's some freelancing job opportunities to drive around in the suburbs, she actually goes into the city because there's higher fares and more people. So she's kind of wanting to know what are her income tax issues. So the first thing we want to define is the difference between an employee and a contractor. And one of the big things is one is you get a W-2 and the other one you get a 1099. All right? So when you get a 1099 as a contractor, it's a 1099 MISC, 1099 miscellaneous. And as a contractor, one of the big things is a lot of times people will hear this, as a contractor, you have the ability to say no. That's one of the rules that it's not what you're going to see here in a second, but you have the ability to say no. As an employee, you don't, in general. All right, obviously you have the ability to say no all the time, but in general, you don't have the ability to say no. So as an employee, you get paid and you report it as wages on a 1040. As a contractor, it goes as a Schedule C. All right. Unreimbursed expenses are generally deducted from AGI if you are an employee, except for now you can't. And as a contractor, you have a Schedule C where you put all of your expenses. All right. All right, so how do you develop a relationship? All right, an employer versus an employee. You participate in work things. They furnish your tools, your equipment, your place of work. Payments are based on time spent, whether the task performed. Notice they don't say, you can say no, all right? So basically, they're paying you a salary, typically. Sometimes it's hourly, though. And you're there for a period of time. You're not there for a specific job and then you're done. That is the difference between a contractor and an employee. Okay. Now, There are a few differences that aren't addressed here. For example, if you are a partner, and I believe it's the same for a law firm as it is for a CPA firm, but a CPA firm who is a, drawing a blank on, can't think of the word, it'll come to me in a second. But anyways, a partner that is an equity partner, in a CPA firm, they are actually paid with a 1099 because they are not employees of the firm. They are partners of the firm, and it's a liability issue, and it's just a whole pay way issue. But they are still employees, but not employees of the firm. It's a whole different concept, and there's a whole different way around that. So they're contractors, they're not contractors. That's not the typical contractor relationship that we're looking at right here. So expenses fall into the following categories. We got transportation, travel, moving, education, entertainment, and then we have other. So we'll address those as we go. So transportation, there's a couple different things. We have transportation, which includes commuting, all right, which commuting is not deductible, all right, or included in cost. And so back and forth, we know, or we should know, you cannot deduct going back and forth to work. There are a couple exceptions, and that is if you're transporting heavy machinery or if you have more than one job. All right, so more than one job, that can be an issue. And then how much are transportation? Well, in 2019, the amount that you can use for the standard mileage is 58 cents per mile. So if you do have those type of things, you get to do 58 cents per mile, plus you get to do parking, and you do need to keep what they call adequate documentation. Okay? So when you're keeping track of those mileage, there's different ways in which you can do that. Now, there's also what's called the actual mileage, all right, or actual cost, sorry. That's where you're actually going to keep all your gas receipts, all your maintenance receipts, and all your mileage receipts. Okay, that's a royal pain in the butt. But where this can be helpful is if you have an older car. If you have an older car and you're using it for work with a lot of mileage, then sometimes the actual cost method can be better because if you're going to have a lot of repairs and you're using this a lot, then that would be something that you might want to have some of those repairs go under the actual cost method because 58 cents per mile might not cover your expenses. But it's a lot more documentation. The other way, all you got to keep track of is miles. So when we look at Morgan, she has an in-home office, so the apartment is going to be her place of business. Right? So then whenever she does any transportation to go out and do tutoring, she would have mileage. Right? So she's going to want to make sure that she keeps track of that mileage, and she could use some type of tracking method, or she could just keep track of it in her car. I've told people that I've helped before, keep a notebook in your car. As soon as you get in the car to drive somewhere, put the date, look at your odometer, either write down the odometer, and then write down when you get there, or just keep track of what the distance is. There's also apps now that keep track of that for you. Now, that is not commuting because her home office is her home. Okay. Now, commuting expense between her apartment and her enrichment child care, that she cannot do that. That is commuting when she goes to her regular day job. Now, she's in her senior year of school and her parents gave her a car. So she does not know how much the car costs. It's one of the questions they're going to ask you. She does not know the original odometer reading. So probably the best method for her is going to use the standard mileage rate, and she's just going to want to keep track of that mileage. Because one of the things they ask you is, how much did your car cost, and what was the original odometer reading when you got the car? Because they're trying to figure that out when you're using the actual. Oops, thought I hit the button. All right. Now, Morgan wants to make sure she has everything she needs, and so there's a couple of the options she could have to keep track of her mileage. Now, QuickBooks Self-Employed is an option, but right now, as far as I know, that is not an app. So if I was going to use something to keep track of my mileage, I would actually want to have something that could actually be something that would be very handy to me. So I would probably be looking for something that would include an app on my phone. So I could pull it up, log it, and go. And there, as my understanding, there's several of those that are out there. I tell everybody that I do it for, you got to keep track of those mileage. And I know that there's a lot of people that don't, okay? They guess, they come up with it, they say they have it, but, you know, it only takes one time for them to come in and say, do you have proof of your mileage? And then you don't. And remember, you have to provide that burden of proof, not the IRS. All right, so travel now, we're looking at travel. That's defined as not being at home. So travel is not necessarily that you're far away from home. It's not being away. It does not have to be overnight, all right, but it's usually being away from home for a period that is roughly more than 8 hours, all right? So when we're looking at it, what they're looking at is you want to try to not duplicate any expenses, avoid duplication of expenses where taxpayer incurs anything at work and at home and doubles the expenses. We're also trying to make sure it could include lodging, it could include meals, and it could include transportation. All right, so like I said, overnight does not have to include 24 hours, but it does have to be longer than your workday. So meals and travel could be the fact that you're leaving, going to Kansas City and coming back. It could be that you're leaving and going away for long enough that you need a period of rest before you come back. You know, you're leaving at 4 o'clock in the morning to attend a 7 o'clock in the morning meeting, and it's going to last all day, and you just need to rest before you come home, but you're still driving home that night. The other thing, being away should be a temporary situation. So if it's longer than a year, that's no longer traveling. Okay, that's living. So there is a difference. And then the expenses and how it's accounted for is going to be different. The tax home generally should mean a business location of some sort. And there's some exceptions that are under the new regulation. Now, convention travel is also different. Okay, so when, for example, we're going to look at the type of conventions that we're going to. And I think this is interesting only because, so a doctor, the example they gave here, a doctor attending an out-of-town seminar on estate planning would not have deductible expenses. So you can't just choose to go to a seminar that has absolutely nothing to do with what you are in and deduct that as expenses. Okay, now, if you're trying to go in a new field, that's called education. That's a whole different thing. But traveling for business on travel expenses, it needs to be in the field in which you are in. And that would be a conference that you would attend to, all right? So no deduction unless it's related to your business. And then there are some restrictions, especially when you have spouses or any type of dependent traveling with you. All right, it has to be for a business purpose. There has to be a reason that that dependent or child is traveling with you, or it is not deductible. The wording up there is very funny. So it has to be for a business purpose, or it is not deductible. Okay, then we talk about education travel expenses. All right, so this is also interesting. A Spanish teacher traveling to Spain to work on the language is not deductible. A Spanish teacher should not have to travel to Spain to work on her language. But a Spanish teacher traveling to Spain to look at artifacts that are only located in Spain would be deductible, because that is something unique and she can only find there. Or that's a Spanish history teacher traveling to Spain to study historical documents only available in that museum. So what they're saying is you don't have to go to Spain to study Spanish. So that's wonderful, okay, that you want to go to Spain, but you can't deduct that as a travel expense just because you want to. Now, take that a step farther, and a teacher taking a group of kids to Spain to show them Spain and to help their language, that's a different thing. Then that's a whole different group of travel expenses, and depending on how it's paid for, I know like in the high schools, the parents pay for it, but sometimes the school district supplements it. That would be deductible. That's a whole different level. The Spanish teacher is not going to learn Spanish. The Spanish teacher is going to enrich the kids. So that's a whole different rationale. So you got to look why you're going. And what are you doing that you can't do necessarily here? Or what's the benefit and how are you deducting it? That's why we're looking at it like that.
So if an art historian, if I want to go to Spain to go to the Prado and look at some paintings that he could look at in a book at home.
Well, then what's the rationale for looking at them in person? So, yeah, you could look at it in a book, okay? So just like I can study tax here. So if I said I'm going to go to DC to look at the tax something, okay? I can't even think of what in the heck I'd look at, but the tax something, I'd have to come up with a better rationale. But there are tax conferences all over the United States that I could go to, that I could benefit from, because there are people there speaking on things that I can't necessarily get here. Even though sometimes there are conferences here, the timing and such might not work. So a Spanish teacher or an art historian going to look at the exact, the original painting, to study the original painting, to come back and do blah, 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 is different than looking at it in a book. So that would probably be okay. The art teacher going to study the original painting because he's always wanted to see it, no. Okay? So that's what they look at. Now, I usually get this question, and we have a small class, so you guys haven't prompted me with this question. I think that Dolanda might have asked it if she would have kept coming, was, are they really going to check it? I usually get someone that asks me this at some point. Are they really going to check that? Are they really going to check to see that the art teacher really didn't have to go to look at that? Maybe not. Probably not. But I can tell you that I would not deduct that amount of money on my taxes knowing that I'm not supposed to have them come back and look at it and tell me now I have to go back and amend my taxes and pay the difference. So, and all of you going to get your CPA, if that's where you're going towards, that's your ethical responsibility not to do it and to tell others not to do it. So I can tell you on a lot of these things, are they going to check it and are they going to find it? The answer is a lot of times, no, they're not. But that's our ethical responsibilities. That's why we are the CPA, right? That's why we're going to get this, just like on a lot of other things. No, they're not going to find it, or no, they're not going to do it, or no, they're not going to look for it. But that's still not the right thing that we're supposed to be doing. So I still get that question a ton. Okay, travel, one of my favorite things, because yes, this is not done right. I will just tell you this right now. So when you travel for business, all right, what is supposed to be done and what happens, a lot of times two different things. So meals, lodging, and other expenses must be allocated between personal days and business days. That may or may not happen. When you take a business trip, when you tag on those personal days at the end, usually, if you do it right, it's very easy to actually handle it right without even trying to, okay? Because the airfare, if you're going on a business trip, is business airfare. So that's the easy part. And as long as you stop the hotel when the business trip is over, then you're good, okay? Because that's usually the biggest thing that helps. But if the hotel keeps going, then you have a problem. So deductibility on transportation costs on the airfare depends on whether it's foreign or domestic. So if domestic, if the purpose of the business trip is business, which is usually why most of us tag on extra days, is because we're going on a business trip that happens to be a cool place, all right? So we stay an extra couple days. Transportation is fully deductible because we're going there for the purpose of business. If its primary purpose is pleasure, no transportation is allowed. So basically what that's saying is you were already going to Florida, and now you're going to go to a one-day seminar during your week of Disney. You cannot now deduct your airfare for you. Your family's airfare you're paying for, but yours you're going to deduct because now you're going to a one-day seminar. You can't do that, all right? Or you're driving to Michigan, and now you're going to deduct part of the driving because you're going to go to a one-day seminar. Okay, you can't do that.
Does it have to be like 50% business?
Usually it's the 50% rule, right. So if you can get 50% of it in there, then you're usually fine. All right. I've had some where, like, I was already going to Chicago, and for business. And we had a trip up in Michigan. And so we stopped through Chicago on the way home. So I deducted the travel on the way home, the miles on the way home from Chicago. Not the miles on the way to Chicago, because I didn't have to drive to Chicago. I was already up in Michigan. But I got half the miles on the way home because either I was going to be flying to Chicago or I was going to be driving to Chicago. And so that's what I got. Instead of them driving me all the way home and then me flying back up there, they just stayed and then we just drove home. So, but we were still up there for 5 more days. It's not like we stayed for one night. We were 5 more days stuck in Chicago. But so, and then we actually had to upgrade the hotel. So what happens? What do you think happened in that situation? If we upgraded the hotel, because there's one of me and there's 4 more people in my family. All right, so the college pays for a hotel. They pay for the conference price of the hotel. The conference price of the hotel, even in Chicago, was like $269. That hotel did not fit 5. Okay? We squeeze in for a night or 2. We don't squeeze in for 5 nights. All right? So what do you think is the difference? Who pays for that? I do. Right. So basically, it's all one bill, but then what I had to go through each night was going, I think it was $30 more, and take out and do $269, $269, $269, $269, and then I added that up. So I paid the difference every night.
So if you go to a conference in a really neat place and they have meetings in the morning and you're finished at noon every day and you have the rest of the day, you still count that as a business?
That would be a business trip because unfortunately, that's a lot of business trips. So you're there, if you're there for a week-long conference and it ends every day at noon, but every day the next day you have a meeting, that's a business trip. Yeah. All right, for foreign travel, transportation expenses will be allocated between business and personal unless it's a 7-day or less. And the reason behind that is when you're going overseas, 7 days or less, that's a quick turnaround. And basically, if it's 7 days or less, then it's all transportation, all right, because you spend 2 days traveling, okay? And then, or less than 25% was on personal, or taxpayer has no control over your arrangements. So if any of those things are happening, it's 100% business. Otherwise, if it's a personal trip and a business trip, then you just allocate between the two. And that's basically, James, based on the percentage as well. And with international travel, one of the things with that is a lot of people do tag on time when you're doing international, if you're not a constant international traveler. If you're a constant business traveler international, then it's not a big deal. But for people that get an international business trip, a lot of times you tag on a little bit extra on there. Travel days are considered business. That's why also on the business, 2 days right there out of 7 are business days. And then if you have 1 or 2 days, you're already at 4. Weekends, legal holidays, they are considered whatever the preceding days are. So if you work on Friday and work on Monday, weekends are business. All right? And if the trip is primarily for pleasure, no transportation is deductible. All right, so make sense on education? All right, education expenses. All right, so self-employed taxpayers are deductible if they are included to maintain your current or your improve your existing or to keep legal status. So like a lot of times I have different friends that are electricians. They go through different things to keep their skill sets up. Or if you are an accountant and you're doing things to keep up your CE, those are things that would be education expenses of a self-employed person that they would have to try to keep up those education requirements. They are not deductible to meet minimum education requirements or to go into a new trade or business. So if you're going to switch careers, those are not deductible education credits. Now, what you could do is go and do the American Opportunity Credit, which we haven't even talked about yet. So going back to school, that's different than what we're talking about here, all right? So what is included in the education expenses we're talking about? Basically everything. Everything except for room and board. No room and board. Basically what they're saying is everybody has to sleep and eat, whether you're going to school or not, so room and board is not included. So the deduction for qualified tuition and related. So This deduction is for AGI. This deduction is on your schedule 3 or 4, okay? It goes for AGI, and it's going to show up as one of the numbers that come in with number 6. And I'll show this to you in a minute when I show you a couple other things all at once, okay? And so this for AGI, this is not a credit. This is not the credits we're going to talk about in Chapter 13. Not a lot of people use this one for one reason. Well, for 2 reasons. One, it has a much lower threshold for how much money you can make. And 2, a deduction is not as good as a credit. All right? A credit, and we haven't talked about credits yet, but a credit directly reduces how much money you owe. If I owe the government $8,000, a $2,500 tax credit, how much did I just say I owe the government?
$8,000.
$8,000. Now I owe them $5,500. It's a straight $2,500 reduction. But a deduction has nothing to do with how much I owe the government. A deduction says my AGI was $100,000. I have a $4,000 deduction. Now my AGI is $96,000. So all it means is I pay taxes on $96,000. I pay taxes on $4,000 less, which does not equate to paying $2,500 less in taxes or back to the government. So a credit is always better than a deduction. So the individuals who take the deduction are taking it because they can't take the credit. Okay? So this is allowed for qualified and related expenses that we just talked about. Now, it said it expired in 2017. It did. It was extended in February of 2018. So I'm going to jump me back. 2019. For people to retro back and do their taxes. I about had a heart attack. So we literally had to go back for anybody, and I only had one person, and retro, and we could file their taxes. So those individuals, I had one person, I had to go back and amend their tax return because they had already filed and did not take the deduction because the deduction was not extended, but it was extended. So I'm not sure why that says 17 because it was actually 18 and it was extended into 19, but it wasn't extended into 19 until, like I said, February. I got an alert in late, and actually it might have been March, that said you could go back, and I'm like, you got to be kidding me. So the government's gotten worse and worse at not only putting things in or out late December 31st, but then actually going into the new tax year after taxes have already been done. Now, I recommend you wait until February 1st before you do any taxes. That's when the forms are also finalized, all right? Some companies don't even send out their finalized W-2s, 1099s until then. At the same time, with identity theft the way it is, you don't want to wait too long to also do your taxes. So you kind of have that window of get it done in February is my recommendation, but make sure you check the latest tax releases before you do your taxes. All right, so deductions for qualified tuition is if you're single, you have to make less than $65,000. Married is less than 80. No more than 80, sorry. And then notice it goes down to $2,000. If you're married, it's less than $160,000 and you only get $2,000. So it's a low threshold comparative to what we're going to see with the American Opportunity Credit. So if you're married, you can make no more than $160,000 combined income to get this deduction. So whatever is required for enrollment, this does include activity fees. It's expenses not related to anything with work. You cannot be married filing separately. You've heard this for a couple things. To avoid the double benefit, you cannot take the credit and the deduction. People have tried to do that. And the 4 AGI classification avoids the non-deductibility of miscellaneous itemized deductions. So what does this do? This helps people who could not deduct some education expenses that were miscellaneous from a non-reimbursed work environment that might be able to put them in this environment. And the other thing here No, that doesn't go here. I'll talk about it. So let's look at here. She's starting her job. She enrolls in an evening master's degree program in child development at the local university and begins attending classes. It is not required for ECC, and it is not required to improve her skills. So it's not part of what she needs to do. It's something she chooses to do. So as a part of this, none of her expenses would be deductible. All right, so none of would be allowed to be deductible based on that because it's not part of her job and it's not to require or to maintain her existing job. So that would not be deductible. Now, if she were to do the American Opportunity Credit, could she get a master's degree? Yes. All right, so a little bit different.
I think the American Opportunity thing was just for the
First 4 years, I'm sorry.
So
Lifetime
it's
learning.
lifetime?
Lifetime learning. I kind of sometimes speak of them as both, and then there's a cutoff. So American Opportunity is the first 4 years of college, and then after that it becomes lifetime. You can always, they're not the same credit by any means, so that's not what I meant when I said them. But if you can't get the one, you can always get the other. So there is always a credit you can get in your life. It just depends on, as long as you don't make too much money. I shouldn't say there's always a credit. You can get a credit as long as you don't make too much money for education. One is for first 4 years, and then the other one is for the rest of your life. All right, deductibility of your house. Okay, so deductibility of your house. It is restrictive, but here's the little caveat I have to add to that. It's restrictive, and then it got better, and now they're saying it's restrictive again. It used to be really bad. It used to be really bad. It got better, I want to say, kind of mid-2000s. They're saying it's back and being tough again. I can't tell you if that's true or not. I haven't seen that as proof. I've read it, okay? It got where you didn't, and the only reason I'm not sure if this is true is because there is so many people that work from home that are not just employees working from home, but contractors working from home. That here it talks about that you have to have an exclusive, like, place to work. I don't think that's true. I do not believe that's true. And that's the one thing that changed back in the 2000s, was that you did not have to have a 10 by 10 room set aside. You needed to have a place set aside that you were working. But for example, when I started working here in 2007, for 2 years I continued to consult with Reuben Brown. Now, I did not, and technically I was employed there, but I wasn't employed there. I was employed there, but I did not ever go into the office. I had one client that I was still the manager of, so I did deduct part of my house because I worked solely from that house about 20 hours a week while I was teaching full-time here. But I had a home office, but it was my living room. That was also the kids' playroom. You know, but it had a computer, it had a computer desk, it had a printer, it had everything else. But that's where I did all my work when I needed to work. And when I needed to, there were no kids in there. So, and that's how a lot of people do work that work from home. Because when they work from home, there aren't kids there. You know, they're kind of out. So I'm a little bit on the very restrictive due to abuse. It has been abused. I do agree with that. But I think there's other measures that they're taking from the abuse side. And I think you do want to be careful if you're claiming to work from home. You better be sure you are working from home. I think that's what you want to make sure you're doing. I was working from home, and I claimed my home, and I claimed the right size of my home with the right deductions of my home. That's what you want to make sure you're doing. Don't claim you're working from home if you're not working from home. All right. And if you're getting reimbursed, don't claim you're working from home. You know, so if your company's giving you something, don't do that. So on the home office is allowed when the residence is used on a regular basis as your principal point of business. So for example, I have friends that work 3 days from home and 2 days at work. So that would be their principal point of 3 days a week. So that's how you would use it then. So then you want to make sure that you do 3 days a week, if in fact it's then for 52 weeks out of the year. And that's what you'd use. Not 5 days a week for 52 days out of the year. You want to make sure you use it. And that a place of business can be used by clients, personnel, customers Doesn't have to have people come there if that's not the type of business that you have. All right. Now, the next thing is very important for part of us. The home office deduction is not allowed as a miscellaneous deduction anymore. So for what I was using, that can't be done anymore. Home office deduction is allowed for sole proprietorship. So if you're doing a Schedule C, you can still do a home deduction if your Schedule C is running out of your house. But for all of us and those who work from home, if you were going to do a deduction for your home office, you can no longer do that. The only way that you can do deduction for your home office is if you have a Schedule C. So only sole proprietorships can do home office deductions right now. That was a big hit for some people. All right, so we talked about what constitutes a home office. I believe we kind of talked about that. All right, now there's two different ways to calculate it. There's reasons why you would do, the simplified method is really nice and easy. It's $5 a square foot. All right, you go through and you calculate it. It's nice and easy. The direct method, you go through, I'm doing the regular method first. So the direct method, you go through and you go through the part of the houses that only have expenses that are related directly to your office. And then the indirect method is you go through and everything for the whole house. All right, so sometimes you have expenses that are directly related just to your office. So if you have a landline, go back to those days, and you had a fax machine that you paid for just for your office, and you had a phone number just for your office, well, those would be expenses that were directly related to your home office. If you bought a computer for your office, if you bought paper for your office, those expenses would be directly related to your office, and that would be direct expenses. If you had indirect expenses, those would be things like gas, electric, internet. And then you'd have to allocate them based on usage. And usually the easiest way to allocate them based on usage would be something like the room you're working in is 10 by 12, so it's 120 square feet. The size of your house is a 2,000 square foot house, so 120 divided by 2,000. How often do you use that room? 5 days a week out of, multiply that by the number of days in a year, blah, 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 divided by 365, and you take a percentage. All right. And so you end up with, 35% of the expenses are allocated towards that. Same thing for cell phone. You have a cell phone, well, chances are you use it for business, right? How much? And I always get people, 80, 90%. I'm like, really? I said, just step back real quick. When you're texting your kids and your wife and you're on the internet, how much of that is for work? I'm not saying you don't use it a lot for work, but think about that. And now give me another percentage. And they almost always go from this 80 or 90 down to, let's use 60. I'm like, okay, let's use 60. So, because the first number that always comes to your head is usually not the number that you're going to use. All right, so home office is self-employed is for AGI. Now, a home office cannot give you a loss. All right, a home office cannot give you a loss. Disallowed amounts can be carried forward and used for future amounts. Now, your mortgage and your taxes are going to be used at that same amount based on, like, if it's 120 square feet, based on your total amount of your square footage in your house, and then you've got to take that amount off your total mortgage and your taxes off what you then itemize. All right? So if your mortgage is $7,000 of mortgage interest and you use $1,000 for your home office deduction, then you only have $6,000. Okay? The simplified method, this is what I was talking about. The most square footage you can use for the simplified method is 300 square feet because the maximum deduction is $1,500. But the nice thing about it is if you have a small space like that 120 square feet that I talked about, you take that times $5 and you're done. You don't have to worry about anything else in calculating all of the utility bills and the cell phone. And sometimes this gets you more money than doing it the other way. And you don't have to worry about it because this is the number. You don't have to say, well, I didn't actually spend that much. You can just be like, oh, it's 120 times $5. Okay, so let's look at hers. So she uses a second bedroom. The bedroom is 200 square feet of a 1,200 square foot apartment. And you take the percentage, so it's 1/6 of her apartment. Her rent is it tells you it's $15,000, her utilities, and her renter's insurance. So it totals $18,000 is what she spends a year. In addition, she has various software supplies, $700, freelance driving, as well as furniture, a table, chairs, and a lamp. All right. The lamp she can immediately expense under Section 179. Remember, we just talked about that. Okay, and so if she does that, that's depreciation, which you can't do under the simplified method. All right, because everything's just $5. So using the simplified method, she'd get $1,000. If we do it the other way, she's actually going to get $3,117. So much better. And the department expenses, just the $18,700 is 1/6. They take 1/6 of that is $3,117. Right. And the deduction will be allocated for a freelance business based on the revenues. So we'll spread it out based on that. All right, moving's pretty simple. You can't do it anymore. All right, the only way you can deduct moving expenses is if you're in the armed forces. I don't understand this deduction. This rationale. I've said this for several of these things that have gone away. I don't get this one because if your company's not going to reimburse you and you're moving for work, then you had to move for work before. All right, they could have maybe increased the mileage before. It was only if you moved more than 50 miles. So I could have understood where maybe they said if you moved more than 100 miles, maybe getting a bigger radius from your job. I don't think it needs to be a lot more than that because even moving 100 miles can be very hardship for some people. I don't understand them getting rid of this. But some companies don't pay for it. Big companies do, but some small companies do not pay to move you for a job. But it is no longer a deduction. All right, entertainment and meals. These have changed. Now, these were abused. I think most people know these were abused. You're smiling. So prior to 2018, 50% of entertainment and meals were deducted, provided they were directly related to and associated with the active conduct of business. Now, I don't know how many of you guys have gone on a business lunch or meal. It's very loosely defined. All right, you can talk about business for about 2 minutes, or you cannot talk about it at all, and it can be written off. But at the same time, there are some business meals that actually do take place. So it's kind of a shame. Beginning in 2018, no deduction is allowed regarding to any entertainment, amusement, or recreation. So that means anything to do with any sports, any deduction with any entertainment, concerts, anything like that, there's no deduction. So any of those, I don't know how they're doing it because they're probably still figuring out a way, but any of those executive suites and all those things, there is not a deduction for those items the way it's written. I'm not saying that they're not figuring out a way, but the way it's written. Membership dues for any clubs, no, and any facility there above, nothing. Taxpayers can still usually deduct 50% of food and beverage associated with operating their trade or business, all right? Meals consumed for basically us while traveling. So when they reimburse us for meals while traveling, they can still deduct 50% of that. Now, under the new law, basically a lot of places still have what they call subsidized cafeterias, and they can deduct 50% of that subsidized. That was, right now they're still there, but after 2026, those were going to go away too. Now, there's not a lot of those left, but some of the bigger companies still have those. Those cafeterias will not be subsidized anymore. Well, I shouldn't say that. They might still be subsidized, but they're not going to be deductible for the employees anymore. And then there's a few exceptions. So, situation where the full value of the meal is included in the income, okay? Expenses directly related to business meetings of employees. So if they can tie it. So a lot of times that's meals brought in-house, all right? Employee-related recreational activities for employees, so like a holiday party or a company picnic, and meals provided for retreats or off-site training. So those can still be taken care of. It's a little easier to show that there is a direct tie-in when you have something in those situations. Yep.
When I was growing up, my father worked for the federal government, and when he had to go on a business trip, they would say, you've got this much
Yes.
money for meals for
Per
the
diem.
whole day.
Right.
But now, with the 50% limitation, it doesn't really matter whether you're going to a cheap place for breakfast or an expensive.
No, it's always been that way, even when your dad went. But it's just different ways that companies treat it. So, for example, here we get $10 for lunch, $10 for dinner. So I'm sorry, $10 for breakfast, $10 for lunch, $30 for dinner. So we get $50 a day. And that is because they do get reimbursed 50% of it, right? So that's their limitation on us. Your dad might have been given $50 for the day, and basically they said, we don't care. Now, we still need to give a receipt. And our receipt has to show we didn't spend more for 10, 10, and 30. So if we decide to spend 20 on breakfast, they're giving us 10. And if I had to spend 10 on dinner, actually, I take that back, wrong company. I don't need to show any receipts. I just get 10, 10, 30. Some places want to see receipts for 10, 10, 30, or your dad might just get $50 and not have to show anything. Every company is a little bit different. A lot of companies have gotten away where they don't want to see any paper. So 10, 10, 30 is just, this is what you get. Okay, so when you're gone, it's 10, 10, 30. When I was at Reuben Brown, we had to show receipts. But we then went back to the client for reimbursement. But as a manager, depending on when I went, I didn't get reimbursed from the client. I got the company, Reuben Brown, paid for it. So I then showed my receipts and I still got reimbursed. So some of it was eaten like in the cost that we charge. So it just depends on who's paying for it and what they're wanting to do, if that makes sense. But a lot of times, my husband has a gas card for his work. They pay for his gas, but they still want to see his receipt. And my husband, when he travels, doesn't have a limit, but he has to bring a receipt back for everything he does. All right, so let's take a quick little break and let's do a problem so you guys can stop listening to me talk for a second.